Hello out there, the slopers. Tim Knight here from gray Palo Alto, California. And a little subliminal messaging here. I don't know if this is going to work or not, but we'll see. You probably don't see that barely flashing before your eyes, but we'll see if it works or not. Anyway, I wanted to try not to make a 10-minute video here. I know your time is precious, but I wanted to just touch on a couple of things with this end of November wrap-up. And I want to make a comparison with this market. Now here we have the lovely Eva Longorio, and the image on the left is Eva without makeup, and the image on the right is after they've had their way with her. And this really, I think, captures the market we're in right now, because there's reality, which people really aren't allowed to see, and then there is the facade, which is what POMO is all about. And if you read between the lines, you don't actually have to read between any lines. You know, I'm really sick to death of it. But eventually we're going to get the picture on the left. Let's just drive this home. So we have here, this is Goldie Hawn, and this is Madonna. This is Jennifer Lopez, J-Lo I guess they call her. We have here Drew Barrymore. And finally, the subliminal ad again. Anyway, the point that I'm trying to make here is that we really confront each day the beautiful, dolled up, cleaned up view on the right, and we're really dealing with the left. And the question is, when is the left going to reveal itself? When will the makeup run out? I don't know. Now, usually before this, I position the chart just so now I've got to totally embarrass myself and move this thing around. Jeez Louise, Mr. Professional. Okay, won't take a moment. Almost there. I've got, oh, go away, Ava. I've got this like so. Got it. Yay. All right, so I just wanted to show you a few charts echoing off our falsehood theme. The first of all is the Russell 2000. This is one I watch very closely, and we are right near, not as close as we were, but I'm watching this line. It's not a horizontal line, but it's a slightly tilted trend line here. I hope, pray, and believe it is not going to pierce above this kind of cup with handle style. If it does, the bull's definitely going to have more room to run. But it sure has been avoiding that action of late. It really spent the month of November trying a couple of times quite earnestly to get above that and didn't. So if we start to back away from that, the more we back away from it, I believe the faster we will back away from it. Looking at NASDAQ Composite, the CompQ, different shape, but somewhat similar story. This trend line here really has imprisoned prices beneath it, and they had a little bit of an escape back in April and a teeny bit of an escape early this month, but ever since this crack back in October of '08 to that glorious, wonderful time, they've really been hemmed in by this. Now, that hasn't prevented them from exploding about 100% higher, because the drop was so dramatic, and this is an ascending trend line. But I really use this as my boundary. And as with Russell, it has not been able to go above that, nor is this pattern very constructive to anything. I mean, look at the really long-term picture here. This is not really constructive toward a continuation of that upward movement. And the big kahuna here, the Dow Jones Industrial, which I got going back for 110 years, thus it takes a moment to load, is like so. And I still am kind of angling for, that's my little holy red dot right there. This is really my ultimate target some years hence. And the key thing about this one is that this chunk of time back in pretty much '06, '07, '08, this chunk of time was complete la-la land in terms of valuations. And I think that range is something we're not going to re-enter for many years to come, save for the notion of like wild hyperinflation where all notional values go up. So I think that, as you can see here, on a very long-term scale, the range bound between 6,500 and 11,500 is kind of the big multi-decade range we're working with, and we're right near the top of that right now. And again, this very important level here, 11,245, has hemmed in prices ever since autumn of 2008, and so the decline from there, I think, is what's most likely. This, by the way, the entire lift from Jackson Hole to here, this entire lift, I think, is when they really slathered on the aforementioned makeup. There was some good reason for this lift. Prices were terribly depressed in relation to values, but this is complete artifice. This portion right here is just total. I'm using nice words, but that's totally artificial in terms of makeup versus reality, and it's starting to slowly edge away from that. And if you really want, sticking with the makeup theme here, the one class of stocks that seems to be just not looking back, even on a day like this, are the luxury items such as, say, Tiffany, which has had an amazing move, and things like the makers of UGG shoewear, which is Deckers Outdoor, a very similar pattern right there. I'm not really touching these. If we were to get a really hardy move down and these guys retraced to these necklines, I would get terribly interested in going long these items. I think that getting back to those levels for Tiffany, for Deck, for a number of others would make them very, very attractive purchases, but not at these prices. I just don't like chasing stuff like this. I'm going to end with a trio of ETFs, two of which I'm short, one of which I day traded today. All of them kind of similarly themed with respect that they're kind of bond related, more like corporate bond world. But first one is LQD. That's the investment grade corporate bond fund. I had a short today. I increased the size of the short 50% today. I really like LQD. You can see how quickly values can erode in something like this, and this to me is an attractive short with a very clean stop there at 111.26 above that. So that's a real favorite right now. Another one that I've mentioned a number of times is BAB. This one actually started off strong today because bonds initially were so strong, but closed the day up not even a full penny. So 0.01%. This is BAB. This is the one security I've been able to find that I can use to short municipal bonds. I've got a decent sized position on this. I still like TLT, but I just thought I was a little too heavy with bond-oriented shorts. So I covered this one today. I was just day trading it, but TLT I still think is intriguing, and it's ultra short TBT. Likewise, I think those who got it earlier today must have done quite well for themselves. I was a little spooked by what looked like a gap fill on both of these items. We can see here the gap fill, which is another reason I exited that. So, anyway, December promises to be an interesting month. We're already got rumblings of Portugal and the euros at levels that I find pretty shocking. The one bit I'm a bit peeved with myself on is paying a little too much heed to the strength of this pattern we see right here, because as you can plainly see, this trend line was cut through like a hot knife through butter. I did enter the day long this, thinking, and it still could, but I have no position, thinking it could bounce to the underside of that trend line. We'll see. As of this point, I have no position, but it's been incredibly weak. So we'll see if there's any more fundamental news. If not, I could see this kind of clawing its way back up to the underside of that, which I think would make a great re-entry point for a short. Well, I thought I wouldn't do 10 minutes here, but magically it always seems to go that way. I guess I just talk too much. So that's the end of November for me. 1 month to go in this interesting year. And thanks for stopping by. Adios.